Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Tuesday morning, October 8, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. US stocks dipped to start the week as investors assessed the outlook for interest rates following the strong September jobs report. The market is taking a breather after ending last week with the fourth consecutive weekly gain and a fresh record for the Dow Jones Industrial Average. The Dow Jones Industrial Average retreated from a record Monday as investors confronted a host of concerns about the path ahead for stocks. From rising oil prices and war in the Middle East to the strengthening of Hurricane Milton and the approaching US elections, investors found enough to fret about Monday to jolt the stock market from its recent upward climb. Investors had cheered the stronger than expected non farm payroll report on Friday last, which showed employers added 254,000 jobs last month, crushing estimates of about 150,000. Even then, few are ready to call the all clear on the economy, even though many are increasingly hopeful that the Federal Reserve has managed to tame inflation without triggering a recession. The Dow Jones Industrial Average fell 398 points, 0.94% to 41,954. The S&P 500 lost 55 points, 0.96% to 5,695. And the Nasdaq Composite led the market lower, falling 1.2% or 213 points to 17,923. The CBOE Volatility Index Wall Street Fear Gauge closed up 3.4 points to 22.64, marking its biggest one-day points gain in more than a month and its highest closing level since August 8. Stocks fell nearly across the board with 10 of the S&P's 511 sectors down for the day. The energy segment ticked higher as oil prices rose. The widening conflict in the Middle East drove global oil benchmark Brent crude up 3.7% to 80.93 a barrel, its highest closing value since August. That's after Brent gained 9.1% last week and its biggest weekly percentage gain since October 2022. Biggest industry laggard was utilities, down 2.3%, followed by communication services, which was under pressure from Alphabet's 2.5% drop. Further dampening sentiment on Monday was an order from a US judge for market heavyweight Alphabet's Google to overhaul its mobile app business to give Android phone users more options. The benchmark S&P 500's biggest drag from a single stock was from Apple after Jefferies assumed coverage with a hold rating, sending the stock down 2.3%. Amazon.com finished down 3% after Wells Fargo downgrade. Among individual stocks, Nvidia, up 2.2%, was the only member of the Magnificent Seven group of big tech companies to end higher. Pfizer shares gained 2.2% after activist Starboard Value took a stake. Supermicro Computers soared 16 points, 16 percentage, making it the best performer in the S&P 500 after the server maker pointed to signs of strong demand. Among the benchmark's biggest gainers was Generac Holdings, which added 8.52% as investors bet on solid demand for backup power generators because of the pending hurricane. Air products and chemicals closed up 9.5% on a report that activist hedge fund Mantle Ridge has built a position in the company. The 10-year US Treasury yield jumped above 4% to 4.025% on Monday for the first time since late July. Meanwhile, gold is steady at $2,644 per ounce. Investors will now turn their attention to earnings season, with kicks off this week with results from PepsiCo on Tuesday, followed by the first of the major banks on Friday. Investors will look for clues from the financial strength of consumers' companies' ability to monetize AI and the overall impact of lower interest rates. The September CPI report is also on the economic calendar this week, set to be released on Thursday. Economists expect the CPI index to rise 2.3% year on year in September, down from 2.5% in August. That's it for today, folks. See you tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for the market. Happy investing, stay inspired, and remember, it is all about money.